This deal hits the market, $18 million, 2330 Grand Avenue. I'm like, I'm going after this. I got it. I'm in Grant's real estate club. You know, I feel like Grant can maybe help me raise money through the club, all this stuff. I go after the deal. I get control of the deal, beat out some billionaires in town to get it. It was a 39 unit in Pacific Beach. And I'm thinking like, oh my goodness, I can't believe I just scored this deal. I have 90 days to close it. Interest rates shot up, call it 3 or 4 times, September, October, November, 2022. I had an earnest money deposit of $500K. That was my own money I put in that I lost because I could not close the deal.
All right, guys, welcome to another episode of The Report. Today, I got someone who's doing big things here in San Diego. I got someone who's taking advantage of the ADU laws out here in California. He's got his own property management company. He's doing ADU developing and he's even getting into the construction portion of all this. I got Chris Luna. Chris, welcome to the show for the second time.
For the second time. Thank you, Rich. I appreciate you getting me in here, man. It's great to see what you've been building, and I'm happy to be a part of it and bring value to the audience however I can.
Dude, likewise, my man. I'm super excited for the conversation. And by the way, I got to make it out to your new meetup, Margarita and Mingle. You guys do that. I think it's this coming Thursday, right?
Yeah, every last Thursday of the month. We try to stay away from the the middle Wednesday because that's yours. You claim that week. So 2 weeks after your event, we do Margarita and Mingle. We attract a very similar type of audience, real estate business professionals, influencers, whatever. And it's been good. Every last Thursday of the month, 5 o'clock at Hideaway in Pacific Beach.
Okay. You were doing it here downtown for a little bit, and then you switched. How come you guys switched venues?
Yeah, great question. It was at Teco Besso, rooftop vibes. It was good. But what we found was 5 o'clock, 6 o'clock coming into downtown, it was a little rough. And then besides that, the owners of Teco Besso decided to remodel. So we
Bring your mic up.
Yeah, we had to move on from it.
Got it.
So we moved to Hideaway, and it's been great.
I got to check it out. And Hideaway, who developed Hideaway? Because I think that came out not too long ago. I think my boy Vince was a part of. There was a few people that were part of it. I don't know who it was, but I know my boy Vince was a part of it. They probably have multiple owners, but I got to go check it out.
Yeah, it's really cool. It's a vibe. It kind of reminds me of like Bungalow in Los Angeles. It's just got this boho chick vibe.
I love it. I
like it. Yeah.
Good stuff. Cool, dude. So much to cover here, man. So just real quick, like, give me a snapshot of everything that you currently own in the real estate space and what you're currently doing.
Cool. I mean, I started, a lot of people know my story, San Diego State, where I went to school. I was buying single family homes, snatching them up, 600, 650K, building ADUs on them. That was the bread and butter. Probably did about 30 transactions at San Diego State between flips, wholesales, and buy and holds. Over time, I wanted to graduate. I didn't have the pride of ownership of walking up to my property. There's trash, tenants, it's just kind of a mess. So I said, you know what, let's sell some of these, even though the cash flow was good, and move it to Pacific Beach. So 2021, 2022, I start selling off SDSU deals and moving them to the beach. And now I have about 14 deals total. Some of them are pre-construction, some of them are entitlements, and I'm just pushing these things through using ADU code to build multifamily developments.
And how are you typically funding these deals?
Yeah, early on, it was friends and family, and I'm still doing friends and family. I've looked into starting a fund kind of like similar to yours. I don't think I have the audience yet to do that, and so I'm just slowly growing with friends and family. Often I'll sell things and 1031 exchange them, so my equity's just grown over the years.
And so you're typically parlaying some debt with some investor equity. What does the capital stack typically look like when you guys go and buy like a development project?
Yeah. Often,
and is there 2 phases?
Yeah, there is. Yeah.
Okay, so talk about that.
So often the rents are too low when I'm buying at the beach because tired old owners have kept the properties for a while. And so they don't bump rents. And those rents are low, but they decide to sell and they own it free and clear. So they sell it to me, let's call it 1.7 million. They take their money, they're happy. Now, the problem with that is the rents are low. And I can't go get traditional financing from Fannie and Freddie. So we do bridge lending where we can come in 85% loan to cost and maybe come in with 15% down. Little riskier, but we believe in our projects enough to where we're adding enough value via ADUs and remodeling that we refinance out of it once the project stabilized with renters and whatnot.
So are you guys actually buying like existing apartment buildings and then adding ADUs, or are you guys buying just straight land or like a single family house where you're tearing it down and then just building basically ground up?
A combo of all of it. Early 2021, I bought a 5-unit, 7-unit, and 8-unit all in Pacific Beach. Learn from my mistake though. That was good. I broke into the industry. That's great. But now that's not the ideal. If there's a secret hat people want to know, you should, in San Diego specifically, you should be buying a single family home with multifamily zoning up to maybe 4 units with a lot of land where you can turn a 4 unit to an 8 unit using SB 1211 or bonus ADU program or complete communities.
Yeah, I mean, I'm working with France. You know France. I just had him on the podcast recently, but working with him with like a local project I have here in Lit Italy, and just since I've had the deal the last year and a half, the zoning changed a little bit for that particular area. It's in a historic area of Lit Italy, but initially we were gonna the highest and best use was to do like a 2-story ADU. I think we could only go up to 800 square feet, and then it would have a 3rd-story rooftop, and it was going to be a 2-bed, 2-bath. And that was kind of the highest and best use at the time. And so since somehow the zoning had changed from how France describes it, and so now we can go 24 floors up.
Wow.
Yeah, which is
That's
pretty
it.
crazy.
Oh, yeah.
And it's zone commercial mixed use. So we could do like multifamily, we could do boutique hotel, or we could do a combination of like multifamily with a portion boutique hotel. And so I thought, okay, well, the lot's not that big. So if we're going to go up, I would like to make a run at the property directly next door, which is like a fourplex, and then combine both of those parcels. And then now if we do go up, it can be a much larger property in terms of square footage and all that good stuff, and really provide some parking. So excited for that. I'm going to be meeting with France and kind of talk a little bit more about what the options are, what that would look like. But I think that's just one example of what you're alluding to. Depending on where you guys are located, especially if you are in California and you guys are in high growth, expensive markets with affordable housing issues, get with someone like France, get with someone that knows what they're doing, and see what your options are. Because I think often you might be sitting on a piece of real estate here in Southern California where you don't even know what the full potential is.
Oh, yeah, exactly. I have people reach out to me and they're like, hey, I see what you're doing. My dad's sitting on a piece of land by the border closer to like Mexico. I forget like exactly the city, but we went and walked it, and it's over an acre. It's a 6 zone. There's development going up all around it. I'm like, you should definitely use the bonus ADU program on this. His dad owns it free and clear too. So it's just like, there's a lot of opportunity like that people don't realize they have. And there's a great opportunity. I think it's the biggest opportunity in America right now for ADU development, 100%. There's no city better across the US that is pro-development.
So can you make more money buying a existing multifamily property? Let's just say here in San Diego, I see a lot of 6-plexes, 8-plexes, maybe up to 12 units that are just like in North Park, South Park, Golden Hill, PB, even Mission Beach. Can you make more money buying an existing small multifamily to where you can add X amount of units, or can you make a lot more money buying a single family property, doing tear down and just building ground up?
Yeah, that's a really good question. I feel as if where the debt markets are currently, if you're going to go and buy a 5, 6, 7, 8, 10, 12 unit, the purchase price in San Diego, anywhere from 400 a door to 600 a door, you're up there in purchase price. You're talking 4, 5, 6 million, and then you got to go put debt on it. So if you put down maybe only 50% down, okay, maybe that makes sense, but your returns are going to be less because you got to raise more capital. So I like kind of what you're saying, like do a single family home. Sometimes those owners, they're ready to move on. And so you can buy a home in a great location for 800K, 900K, maybe $1 million, in San Diego, but you could snag a deal for 850 on a big lot with good zoning and then utilize these programs San Diego offers.
Yeah, that makes a lot of sense because if you buy that single family, you're going to get a $3 or $4 million discount versus buying that 10 unit, 12 unit property, and then by the way, you can just tear the single family down or keep it existing and then build another structure. However, I don't know. I've seen some projects like they have a single family property on a big lot and then they build 10 units in the
Yeah, it
back.
looks kind of funny.
And then it's in a residential neighborhood. It just doesn't look
Yeah,
right.
yeah. Yeah, if you have an architect who can kind of design it so that it flows well, but I'm with you on
There's
that.
ways to do that.
Yeah, it doesn't look as good. Like maybe if you had like a flat roof, like if it had a pitched roof and then you flatten that roof, maybe it could kind of step and look better. And you did like a little sun deck on the front house or something like that the back units can utilize, something like that.
I was looking at property about a week and a half ago, and this is the couple that not sold me, but they started the Beers and Deals meetup. And this is in 2019. I started kind of going to it. And shortly after I started going to it in 2019, they're like, hey, we don't want to do this anymore, but we think that you should take it over. And so I had lunch with them. I took over the meetup. And back then it was like 20 people would show up. and then we continued doing it, and we grew it into a bigger thing. And that was the same meetup that Grant Cardone came and spoke at this past Saturday. And what I actually just had lunch with them, this couple. I hadn't talked to them in a little bit, but they have a really cool house in Claremont on a big lot. And I was like, they're moving. They're like, we want to take you out to lunch. They're moving to North Carolina. So I was like, what are you guys gonna do with your home? And they're like, hey, we're gonna sell it. And they're like, do you want to buy it? And so I went and looked at it, and they already like did all the homework, and they could basically develop up to 10 units in the back. And I ultimately ended up passing on it because, it's inland in Claremont, east of the 5. And I thought, you know what? I only have so much capacity to do so many things at once. And so, our goal is to buy a couple more boutique hotels this year and optimize what we have. But I do want to do a development project, and I do want to start getting into a little bit of development, which I thought it would be really cool to maybe start a second fund under Summers Capital, to where we do some development deals here locally in San Diego in these hyper locations that we really understand very well. And so anyways, I was looking at this deal in Claremont, and I ultimately ended up passing because I realized if I'm going to do all this work, and I can only do so many of these projects at one time, I would rather do it in an area that's going to be a higher growth area, part of San Diego, where it's going to comp out at a higher price per square foot, a higher price per unit than Claremont. And I love sexy locations. I like areas that are on the water, areas with ocean views and that sort of thing. So I ultimately ended up passing, but I'm very interested in finding stuff in high growth markets of San Diego, to where you can build up.
I love that. That's spot on. Claremont, I feel the same way. A big fund in town is doing a deal there in Claremont. They added a bunch of units, and it looks amazing. I think it's called, I forget what it's called, but they're having trouble exiting that deal because the buyer pool for this kind of house plus a bunch of units in the back is a little strange. Now, when I was doing this by SDSU, we would buy the homes and add the ADUs. We had to kind of create that comp and stir up, people investing in that neighborhood by having good brokers, commercial guys who can then go and sell those assets when we want to exit them. So kind of back to your point,
It might be the same group.
Yeah.
Because there was a property like literally 10 doors down, and he was like, dude, I know this builder, they just did it. And they're like, here's the listing, check it out. It's on Crexy. And I saw it was on the market for like 5 months.
Yeah,
And
it's definitely the same one. Yeah.
Yeah, and they want like 5 point something. It's
Yeah.
in Claremont. Looks a little funky, but they did a good job with the build out.
It
But
looks
it's like,
fresh. It's clean.
it's a neighborhood in Claremont that's like a suburban neighborhood with all single family homes, and then you got this big apartment building there and no parking. So anyways, there's probably the same one.
Yep.
But then, that doesn't give the next buyer that wants to go do this development down the street a lot of confidence when that thing doesn't sell.
Yeah, that's why I focus in Pacific Beach and coastal towns, because it's all old buildings. Like I said, these guys, they're 60, 70. I look them up on Tidal all the time. They live in La Jolla, Rancho Santa Fe. They're just sitting on these assets free and clear, and they get older. And so when we're coming in there, bringing new product type, we're making it look good. We're putting some money into these deals on the income side of this equation, because it's all in the math equation, right? We're able to really boost those rents. USD students, SDSU, young professionals who want to be at the beach.
Yeah, that's big. And so when you guys go and look at these deals, like give us like maybe a listener out here is wanting to go do this themselves. How do you approach finding the right deal? Like, what are the main 2 or 3 things that you like to look at?
So it's all in the setup and the layout of the land. If you think of the property almost like they're always rectangular shapes for the most part. If you can get the front house on the front 1/3 of the house, and then you can get like a duplex in the back 2/3 of the house, and you have this kind of center area, you now get to keep all your units intact and not tear anything down, and that's key. And then add where you can. And so if you can add where you can with the correct zoning, which there's equations for that, you don't have to know it, but it helps to know. If you have an architect who knows it, that's good. That's one thing, is the layout of the land. Next thing is vacancy. If I
Real
can,
quick on that note, how wide of a lot is ideal? If you're on the curb and you're on the street level and you're looking at the property, is it the wider the lot, the better? Because if you're going to do an ADU in the back or duplex in the back, is it nice to be able to have the room to do like a driveway?
Yeah, so even more ideal is, so like I'm thinking of a property I own in PB. A lot of the lots there, 6,251 square feet. My house is actually off to the left and front. So I have parking on the right side. And then off the back alleyway, same thing. The duplex is off to the back left corner, and you have 2 spots to the right. So I like that. You can get extra parking. That's another thing we can talk about, is having a lot of parking. And then another thing is corner lots, alleyway access, and front curb cuts to get parking are all huge.
Mm.
Yeah.
Okay,
Because then
I
it
like
doesn't
that.
feel like an ADU in the backyard. It feels like
Yes.
just another unit off
And
to
you
the
could
side.
typically do like another garage in the back
Yeah.
or parking in the back.
Yeah, with the bonus ADU program, it's actually unlimited up to the floor area ratio, FAR. So you can build as many as you want as long as you're staying within these certain parameters.
And what does the FAR mean?
FAR is floor area ratio. Different properties are going to have different zoning. So a lot of the stuff I buy in PB is RM25 and RM11. Those have a 1.25 FAR, I believe, and the other one's a 1, depending on how many units you're going to build. Basically, what that states is I take that 1.25, I multiply that by the lot size of 6,251, and that gives me the allowable. So let's just say I can build up to 8,000 on that property minus the existing. Let's say the existing is 1,000, 8,000 minus 1,000. You can build up to 7,000 plus the house.
Okay, give me again real quick. If someone listening to this is like, I want to know the maximum I can build, quick back of the napkin math. What's the breakdown again?
First thing you do is find the zoning on the property. It's either RS17 single family, or it's RM38, RM39, or RM25.
And what do those
multifamily.
numbers mean?
So they all correspond to a different floor area ratio. So on the single family side, there's a chart we use, and it's usually going to be a lot lower. It's like 0.56, 0.57, 0.58. That's the factor you're going to use. You take the lot size times that number. That's what you can build minus the existing house. That's on the single family side, which is good. On the multifamily side, it's going to be a higher FAR, 2.25, 1.25. You take that number times the lot size, and you can build that.
Okay.
Yeah.
Got
So
it.
it gets a little complex, but what I actually tell people, I've been telling people, is a lot of people think you have to know all that. And if you do, that's great. But like as the developer, I'm the guy who's piecing it all together, kind of like how you run your business, right? Like I have deal flow, I get the loans, I have property management, I have builders. I'm the guy piecing it together. And so if you got scared by what I was just talking about right there, that's okay. Go hire a great architect and they'll do that part for you.
Yeah, no, that's a lot of the game too. It's people think you need to know every single aspect from a legal perspective, how to put together these LLCs and the entities and the bank accounts and operations, property management. I'm like, no, you don't need to know all that stuff. Like from a macro perspective, like know how to put these deals together, know how to hire and work with the right people that are the experts in each particular, bucket. And that's the secret sauce. How you think about Grant Cardone, he doesn't know all the in the weeds things. Like with the boutique hotels that we operate, I don't know the tech stack that we used for check-in and checkouts and all this sort of like little things. I don't know it. I don't need to know it, right? So anyways, I think that's an important takeaway for anyone listening. And so next up, so you find the deal, you find the lot, and then what's the next thing that kind of determines whether it's a deal or not a good deal?
Yeah, a good thing I look into right away, this is a great tip, is the vacancy on it. So if I'm buying a 4-unit and all 4 units, there's tenants in there in place, it's hard to get remodels or access to the units, that's a problem in California. So if I can buy a 4-unit like I just did a couple weeks ago and 2 units are vacant, that's huge. Day one, I'm getting into the property, we're swinging hammers, we're starting demo, and we're off to the races. And we'll convert those units and get them back on the marketplace, make them beautiful again, and then get market rent very fast. So that's huge. If you can get all of your units vacant, great. I like half, because if you get 2, like say you buy a 4-unit and 2, you can keep income coming in to help service that debt since you're getting 85% loan to value. And then the other 2, you renovate right away. So that's another big one, is vacancy.
Yeah, no, that's good right there. And then what's next after that?
Okay, so you got the deal because you have an audience, or you got good deal flow, you have agents, you've lined up the debt, you close it. The next thing you want to do right from the beginning is hire an architect to start the plans and permits. You're going to have a call with them. There's quite a few companies in town that will do it. Talk to people though, because some companies could be slower. Just get the architects moving, because as a lot of people know, plans and permits is slow in San Diego. It could take anywhere from 6 months to 12 months on average, to bigger complete community deals, maybe 18 months.
And I think this is an important thing to remember, like when you guys are getting plans and permitting, is like always understanding where the bottleneck is, because sometimes like these architects get busy. And so the bottleneck could be on you or it could be on them. And if you don't like ping them and get like updates, the bottleneck could just be floating in between you and the architect for like 2 months, and that's 2 months wasted.
Yeah, exactly. I just went into a new deal yesterday that's shovel ready. And there's a little thing you can do. You can go on Acela. I think it's like Acela.com, or type in ACE.
What's Cello.com?
I think it's ACELLA. I think that's the website, and it's the San Diego Permit and Processing. So if you have the project number, you could type that into the City of San Diego's Web Development Services website and see the whole process. So if your architect's kind of ghosted you, leaving you in the dark, you can go check it out and see where they're at.
Yeah, that's big. Okay, so now you got the architect working on the design, permitting. Typically, on average, how long are these projects that you're doing? How long do they take to get entitlement?
On a smaller deal where I'm adding 1,200 square feet, maybe 6, 7, 8 months. If you're trying to do maybe 5,000 square feet and it's like 9 units, that could be about a year or so. If you're doing a complete communities play, like I'm doing with the Coastal Commission involved, it could take a while. I'm talking like 18 months, 12 months alone for the demo permit, because Coastal Commission, like Grant's been talking about, just slows things down. Kind of like in Malibu. He's saying Coastal Commission needs to go away so that they can rebuild that city fast.
Yeah, 12 months isn't too bad. So what exactly is the complete communities? What does that mean?
Yeah, so complete communities, almost like we were talking about earlier with the floor area ratios. It's just the floor area ratios on steroids. The floor area ratios are like 3.5 at the beach. They're 6 in North Park. They're unlimited here and literally in downtown. And there's a map we use, the ZAP map, on San Diego's website, San Diego City of Development or Development Services, that basically shows those floor area ratios.
And does that also tell you how high you can go?
I believe so. On Scout Red, that's a resource we use. There's a little area on scoutred.com that just shows it really quick. But the ZAP website should somewhere. It's a little confusing to use though.
Yeah, because I mean, the property I'm alluding to here in Lit Italy, like going up 24 floors, that's pretty high.
Oh yeah, that's
And so Zap will tell you exactly like how many feet you can go up.
exactly. Yeah, usually I see a lot in North Park, like 60-foot height limit, 50-foot height limit, 40 feet. In PB, it's 30 feet. Here, your only thing you'd have to watch out here for is like the flight path, obviously, but I think that's further down by like that restaurant down there.
Yeah, it's
Especially-
going to be a little bit further north.
yeah.
But I think a good general rule of thumb is like look at the surrounding buildings on the block. How high are they? If the property next door is like 6 floors, you can probably at least go up to that. That makes a lot of sense. If you love real estate investing, passive income, and tax benefits, but don't have the time, my company, Summers Capital, is buying boutique hotels right now. We source the deals, we renovate the properties, and we even handle all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, visit summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show. So how are you, talk about the debt a little bit. So you mentioned typically you're going to buy on bridge loan. And what kind of leverage are you typically seeing out there for these types of projects?
You can get into a deal like shout out Conventus. They've been a great lender for
Conventus,
me.
okay.
Yeah, they're like Center Street, Kiavi, these fix and flip type companies. But Conventus is loving what we're doing here, and as far as adding ADUs, so we can enter on a 85% loan to cost, which is like the purchase price plus the total rehab budget. But they won't just lend on remodeling the first 2 units. They'll say, Chris, we're going to use a commercial appraisal and look at you building all 9 or 10 units out, and we're going to give you that value and give you a loan based on that to build it all out for 18 months. A lot of hard money lenders they want to turn money fast. So it's like 12 months. They want in and out of the deal. Conventus will do 18 months, 24 months. So shout out Conventus. They've been great.
And they do bridge lending for a lot of commercial real estate in most of the country?
Yeah, they're nationwide. I think they're based in San Francisco.
Got it. And then you mentioned you're bringing friends and family into these deals. What does that typically look like, bringing the investor equity in?
I heard this from Brandon Turner once, and he told me, or he told, not me directly, but he told the audience at Ryan Pineda's event that all his early deals and like how he built a lot of equity was by being the doer, the guy doing the work and getting 50% of the deal. So often what I've tried to do is come in with very limited money. It doesn't always happen like that, but the sweeter the deal, the more I get away with that, and I'm able to have people put up the cash, and I'll keep 50% of the deal, and they'll be almost like a silent partner, just weekly meetings, and they're helping guide the project. Maybe they do back end work, taxes, et cetera.
Yeah. And then how do you structure the return profile? So like here with Summers Capital, we do a 7 or 8% preferred return depending on the investment amount. And so each year, the first 7% or 8% that's generated, all of that goes to the investor. We do quarterly, and then anything above that is split 60-40, 60% to the investor, 40% to us. And then obviously you get a pop with the refi, and then another pop when we sell. And then all the tax advantages flow through. So for you, how do you typically set up the return profile for the limited
Yeah.
partner?
That sounds like a waterfall almost what you guys are doing.
We don't do a
Oh,
waterfall.
okay,
We just
got
do
it.
a straight split.
I got it.
I used to do waterfalls with like apartment syndications in the past, and yeah, I just feel
Confusing.
like
Yeah.
it's very confusing.
Yeah.
And a confused mind doesn't act, and so I'm like, let's just do a straight split. So that's what we do, a straight 60-40 split after that preferred return is met each year,
And you keep them in the deal.
and we keep them in the deal.
Nice.
Yeah.
That's good. Yeah,
Yeah.
that's huge. For me, it's always the LLC is the entity that holds title on the property, and I'll control 50% of it, and they'll control 50%. Or I mean, it could be 33 also on some deals, just depending on the deal. Sometimes I own 25%, and I'll have like a community member, someone who brought me the deal. They'll take 25%, so we get to all win together, and then the LPs. But essentially, if there is any upside or downside of the deal, we just split everything based on the equity in the deal. So I basically, if I'm 50% going into the deal, it stays 50% throughout. Now, over the years, I have bought people out. Emergencies come up, people need their money, things happen, they're moving across the country, and I'll buy people out. So that happens too.
Okay. So you're fluid, man. Being fluid is good. So talk about like what are a couple of the bigger mistakes that some people should probably avoid when they're getting into these development type of projects.
For sure. I had a buddy of mine tell me the other day at Fit, we were working out, and he goes, "I love what you're doing in PB, man. It's great. Like keep it up. It's just like San Diego State." And he was like the godfather of San Diego State back in the day. So to hear it from him, I was like, okay, I listen to this guy. He was giving me free game at the gym. And he goes, just be careful. Like the way you could lose everything is people who over leverage. That's how people go bankrupt. And so that comes down to having like deep pockets, which I don't have. I'm not just like printing cash, but always having a plan or having equity or the ability to sell an asset off or be bought out of something that if I need a little 100K injection because rates go up, I could take that money and service my debt. Like I've had some rough deals, is the truth. 2022 is rough. I mean, rates shot up 3 times. And I had an 8-unit that's just been a tough deal.
Talk about that deal. What happened?
Yeah, let's talk about it. It was a 8-unit deal, Pacific Beach. I was able to stabilize 3 of the units, but because rates shot up so much, I wasn't able to refinance. I didn't increase the income enough to service the debt, and so I've been stuck in hard money for 30 months. It's been nuts, but I made it through. And actually, this Friday, I'm refinancing into a construction loan to build 6 ADUs. The only way you lose money in real estate is if you have to sell at a loss. So if I would have sold in month 12, 18, 20, or even right now, I'd lose money. I'd lose like $500,000. But I weathered the storm. I'm now going to build this thing. And then once I build the 6 units, I can refinance finally to a DSCR loan.
Why did it take so long to get the permits to build the 6 units?
First of all, I never started building. That was never my intent. It was
it wasn't part of the initial business plan.
Yeah. And then I learned about this through like architects sitting down with them, and they're like, you could do this. And I was like, okay, let's do it. So I was just slow to kind of move on that.
Yeah. And then you mentioned being in the bridge loan for 30 months. Did you get multiple extensions with the same lender, or did you go bridge to bridge?
Yeah, multiple extensions. And it did get to the point where they have people they talk to too. They have investors. And so 30 was their maximum, 30 months. They're like, you got to refinance. So fortunate to make this one through, because as much as a lot of people talk about the wins and successes, they're not all wins and successes. I've had some deals like this that are definitely tougher. We'll get through it though.
Yeah, and I think like the important thing to remember here is like there's always a way to like when deals don't go initially as planned, as long as you're creative and as long as you have the right resources, you can always take a deal that maybe didn't go as planned. None of these deals are going to go as planned, and then pivot. And so you pivoted. You brought in permitting for an additional 6 units, and now you get out of that loan into another loan, build out the 6 units. By then, you'll force enough equity so you can refi into perm debt or sell for a profit. Speaking of selling for a profit, one of the exit strategies that I see some of these folks, doing, I see it all the time on LoopNet. People that buy these properties, single family property, or maybe it's a small multi, they'll get the permitting to build ADUs or redevelop, and then they'll sell the deal with the permitting. Or maybe they'll put a crazy price tag out there to see if they can get it. If not, they'll do the work themselves and the build out themselves. So talk about that extra strategy. Do you like that?
I love that extra strategy. That was kind of my one of my bread and butters by San Diego State early on. We call it shovel ready, because as you're doing all these deals, like that takes money. So you got to like make active income somewhere. So whether that's through wholesaling, flipping, or doing the shovel ready, it takes a little longer. Maybe it takes 6, 7, 8 months to get it shovel ready. You could take that active income and then fund the deal you want to keep. And so for me, like in Pacific Beach, I have like this line. It's Ingram Street. Anything east of Ingram, I'd be willing to flip it, shovel ready it, or do anything to take that equity and move it west of Ingram. I'm trying to move all my stuff west of Ingram, closer to the water, better the location.
What's the difference in like pricing that you're seeing? Like, you mentioned everything's going west of Ingram for you. What's the difference between pricing out there versus like east of the 5?
East of the 5, maybe in Claremont and Bayho. Bayho's hot right now. A lot of people are catching
You
on.
get
and
views up there though.
yeah, you get the views. It's
Yeah.
nice. Yeah, I think that like in PB, most of my deals are 1.6, 1.7, 1.8. Maybe I paid 2.1 one time.
And what is that from a price per square foot or like
Price
a
per
price
square
per
foot,
unit?
yeah. $900 per square foot. Some of my smoking deals are
Really?
like
In Bayho?
PB.
In PB?
PB,
That's really
yeah.
good.
Yeah. 2 of my deals I closed last year were like 600 per square foot in PB. Those were my best deals. Both I think were off market.
Okay.
Yeah. Yeah. And
In
then
terms of the buy side or on the sale?
on the buy
On
side.
the buy.
Yeah,
Got it.
on the buy, I'm getting some good deals, like 600 per square foot.
Mm-hmm.
Yeah.
That's good. And so east of the 5, how much do those things comping out at on a price per square foot basis?
I don't actually know. And
Yeah.
so a lot of what
Closer to 400.
yeah, maybe. A lot of what I like try and like teach people too is like when I think about early on in my career, 92115 San Diego State, I was buying from there 2016 to 2000, like 7 years. And I was just one zip code, and I became a master at like comps, who the agents were, every owner I knew. And so now I'm doing that with 92109. I only focus on that. Bayho, I think a lot of people in my community, they'll go look there and flip there and wholesale there. I just don't know much about it, but it's less than PB for sure.
And then you got your property management company. Talk a little bit about that because, I know for us, we do have a property management company in-house. I don't talk about it a whole lot, but we do self-manage everything. And obviously, it gives us full control. We're vertically integrated. It gives us the ability to pivot quickly. We mostly manage our own stuff, and we do manage some stuff for third-party clients of ours. Typically it's like on a one-off basis. We don't do a lot of it. We typically just do it as a favor for people in our community, friends, investors, and stuff like that. But I know the property management business is a lot of time. It's you got to be hands-on. It's not a passive thing. Talk about your property management company.
Yeah, it's so important because specifically in the multifamily 5 units and up, everything is valued based off the NOI and a cap rate. And the NOI is determined by income and expenses. The property manager dictates your income. If she's not feeling good one day and calls in sick and she doesn't go to that leasing appointment to lease that property, maybe you just lost a great opportunity to boost income. So that property manager is super important. I've been working with her for years and she does a great job. And then expenses. If a property manager doesn't call 3 plumbers to get the best price and one guy charges $1,000 and there's another guy charging $250, that extra $750 divided by, call it a 5 cap, I don't know what the math is on that, that's a lot of money. So property management is the name of the game. Robert Martinez, he was one of my mentors, and he just talks about how he had management outside of his company, but he brought it back in-house, and he's cranking again. He's crushing it. He's back to the old Robert Martinez. So I try and follow what people have done, and when he says he has 5,000 units and he kept management in-house, that's when he was being successful. I'm like, it's more extra work, but I'm providing jobs and I have a little more control over like what's going on in the organization.
I think that's the main thing for me is like I want to sleep good at night, knowing I'm being a good custodian of other people's money. But in addition to that, I like to have the flexibility to be able to pivot. And if something's not performing the way it should be, we can have a meeting right here in the office, come up with a game plan, and then we pivot and we execute right away. We can move a lot quicker. And I always feel like no one's going to manage your asset better than yourself as the owner because you got skin in the game. You have an alignment of interest for the deals to go good. And so, yes, it's a lot of headaches. Yes, it's a lot of problems. And it's putting out a lot of fires, but it's like those problems are still going to be problems using third party. It's just you're going to have less control. And if you go with the wrong third party, things can go south very quickly, which, you alluded to Robert Martinez. I remember going out there a year and a half ago. We did a podcast out in Houston, and he had just basically foreclosed on a like $52 million multifamily asset. And he said the biggest mistake was he went third party, and they just completely ran all his assets to the ground.
Yeah, no one's going to care more than you. And so on a Monday morning, if you need to have a level 10 meeting, I see those. I want to know about those. Like you can, really guide and direct the team.
Yeah, absolutely. So what's the game plan for you, big picture, as you kind of look ahead? You're doing development stuff. What's kind of the big picture thing for you this year?
Following your footsteps. I see what you're doing, man. You're building, you're growing. expanding the audience, doing real estate, helping more people. And you've been a big inspiration of that. So kind of watching what you're doing and honestly following your footsteps. I want to have influence. I want to help more people. Maybe I get into politics in the future.
Oh, politics.
Grant told me
Okay.
that on the podcast. I was like, Grant, I was being a little greedy
Uh-huh.
for once in my life. I was like, Grant, what do you think I should do as a 36-year-old? He was like, you're young. You're going to continue to do well in real estate. He was like, I would get into politics if I was you. So he said that, and it'd been on my mind. So who knows? Maybe that's something I could do down the road. But I feel like you got to get to a place where you're so financially secure. You know, me, I'm living paycheck to paycheck because I got so many deals going on. But you got to get to so much like security in your financial situation so you can't be bought and you can just do the right thing and help more people.
Yeah,
Yeah.
absolutely. As you kind of look out in the interest rate environment, obviously there's a lot of changes going on right now from a macro perspective and how it pertains to the economy, interest rates, and just overall, a lot of policies I think are going to change hands here in the next few years in terms of real estate investors and entrepreneurs and the way things are done. In terms of forecast and market prediction, where do you see this interest rate environment and like the housing market kind of navigating over these next 24 months?
Yeah, I like to be optimistic, but also be like a realist. I follow some people who are pretty educated on Twitter, see what they're doing, and or what they're saying about all this. And a lot of people think it'll be around the same of where it is now. I know Grant and recently Trump has said, telling the feds to drop interest rates. He said that I think last week. Although he has no control over that, I do think that Trump can move things. He's a businessman, and you can see a lot of what he's doing over the last 2 weeks already in office. He's a real estate guy, and I think he wants real estate to be healthy in America. And so my intuition says it's good for real estate investors, meaning rates are coming down. But, if not, I'd say they stay about where they are right now. I don't see them getting worse.
Mm.
But I'm no economist.
Yes. No, I hear you. I hear you. Well, I mean, we're all speculating. I'm always willing to be wrong here.
Yeah.
Okay, so I wanna switch gears here. You got a few videos that you put out on your social media, and I want to just touch on real quickly a few of these videos. So first one, I saw you did a video how you lost $500,000 on a housing deal. What the hell happened there?
It ended up being $250,000, but
Okay.
the best $250,000 I ever spent. It's the school of hard knocks. So $18 million deal. I had just closed $10 million in Pacific Beach. This is March, April, May 2022. I'm feeling good. I'm like, wow, I just closed 3 deals, sold off a bunch of SDSU stuff. This deal hits the market, $18 million, 2330 Grand Avenue. I'm like, I'm going after this. I got it. I'm in Grant's real estate club. I feel like Grant could maybe help me raise money through the club, all this stuff. I go after the deal. I get control of the deal, beat out some billionaires in town to get it. It was a 39 unit in Pacific Beach. And I'm thinking like, oh my goodness, I can't believe I just scored this deal. I have 90 days to close it. Interest rates shot up, call it 3 or 4 times, September, October, November, 2022. I had an earnest money deposit of $500K. That was my own money I put in that I lost because I could not close the deal. Rates shot up. I couldn't get the debt. And to be honest, if I'm thinking this through, I didn't know what I was doing back then in the multifamily world. I moved. This is a learning lesson. Like, just grow slowly. You don't have anything to prove to anybody. I went too big, too fast, lost the $500K. But the guy decided to sell it to someone else. And after he closed, he gave me $250 back. And I say it was the most.
That was not the seller gave you $250 back.
Yeah, he
that was very nice of him.
It was very nice of him. Ed, shout out Ed. Thank you, Ed. And I learned, but actually, the reason why I'm sitting here today, the reason why I've built community, the reason why I'm growing and expanding is I took that loss and I started using social media right after that. That day, I have the video I filmed. I was so sad. I felt like the biggest failure. I lost all this money. I was like, this is it. No one's ever going to give me money again. But ever since then, I've just been stacking wins and I'm back on a good trajectory.
Was it more so that the rate environment went up and it made the deal no longer a good deal? Or was it more so that you didn't have access to the capital to take down the deal?
Yeah, I think I need to raise $6 million. And I think I finished probably around like $3 million. So a fail on my end, and that's maybe a learning lesson, is people should have a good percentage of that equity raised already. So that was one thing. And then because rates came up, my loan dollars kept shrinking. So I had to go to hard money, and they were prepared to write me a check for $10 million. It was a family office. They came down, they walked the deal. They were still ready to go at $10 million. I was overpaying. I sat down with a billionaire. He was going to do the debt on it. So I made a lot of connections from it. It just didn't work out, which, by the way, was a blessing in disguise because 38 tenants, I didn't know at the time, with potential lower leases, I could have lost a lot of money on that deal.
Okay, next video. You said the secret to real estate investing is saying no to deals. What do you mean by that?
Yeah. Say no to deals. Well, I just think that, I'm an optimist. I want to buy a lot of deals, but the deals that you say no to, they can save you a headache. They can save you a bleed. I don't really know what I was saying in that, if I'm being honest, but sometimes you just got to say no. If you're taking on too much, just say no.
I always say starting is about saying yes. Growing is about saying no. And I think the more deals you can say no to, the better deal you're going to buy.
Yeah, I agree with that. Yep.
All right. Next up, used to focus on $100,000 a month, lost touch of personal relationships. Now focusing on slow and steady goals. What do you mean by that?
Slow and steady goals. I think for the longest time, I'm trying to prove my worth, and I know my worth comes from God. And I think for the longest time, I was just trying to prove to others that I was going to be successful. And I wanted to prove everybody wrong. And so that caused me to work very hard. And it was focused on me, 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 me. What can I do? How much more can I buy? I've flipped the script. How many more people can I help? And so I've just simply had a little tweak in my mindset, and I'm pouring into others now. And that's where it's at. I'm much happier doing that.
Chris, appreciate you coming on the show, man. I'm a big fan of everything you're doing. Keep crushing the game. Keep inspiring. Where can the folks get in touch with you? Where can they learn more about your podcast and everything else that you're doing?
Yeah, On the Come Up podcast. That's on Spotify, YouTube, Apple, backyardcommunity.com. I teach people how to develop ADUs, 2 Zoom calls per week, and access Margarita and Mingle every last Thursday of the month, property management company. The best way is just DM me on Instagram, chrisj.luna. I'm everywhere on social.
There it is. He's Chris Luna, always dropping fire. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you guys in the next one. Peace.